Hello traders, welcome to my channel. My name is Prabhu and I have been trading for the last few years. So I created this channel to simplify trading and help you understand the market in a way that's easy and practical. In today's video, we are diving deep into market structure, one of the most powerful concepts that can help you trade with confidence. Whether you are a beginner or already trading, this series will give you a solid foundation to improve your decision making. So let's get started. Today we begin a journey into the world of market structure. So understanding market structure, a story for beginners, right? To help you understand it easily, let me tell you a story. Imagine you are on a road trip to a new city. The market is like a road trip. When you travel, the road is never straight, right? Sometimes you go uphill and sometimes you go downhill, right? And sometimes you stop at a checkpoint before continuing. This is exactly how the market moves. When the road goes up, that's an uptrend. When the road goes down, that's a downtrend. Prices are falling. When you stop at a checkpoint, that's a sideways market. No clear direction. Just like a driver needs signs to know where to go. Traders need market structure to understand price direction. Now, let's break down the key elements of market structure. So now, there are three main market phases. Every market moves in three phases: uptrend, downtrend, sideways. So now, uptrend means higher highs, higher lows. So imagine driving up a hill, price keeps making higher peaks and higher valleys. Example, if a stock if a stock moves from 100, then 120, then 110, 140, 125. So overall, that's an uptrend. So now, second phase is downtrend, lower highs, lower lows. Imagine you going downhill. Price keeps making lower peaks and lower valleys like this. So a stock falling from 150, 130, 140, 110 and 100. So is an downtrend. So third phase is sideways market, also called as a range bound market. Imagine a flat highway. So flat highway where you are moving straight. Price keeps bouncing between two levels but doesn't break. Uh, a stock moving between 500 520 without breaking above or below. Right? Understanding these phases helps you decide when to buy, sell, or stay out. Right? Now, why market structure matters? Right? Now, let's say you don't check the road. Let's say you don't check the road signs while driving. What happens? You might take the wrong turn. Right? This is exactly what happens when traders ignore market structure. If you buy in a downtrend, you might lose money. If you sell in an uptrend, you might miss big profits. But if you follow the structure, you can first one is maybe enter trades at the right time, avoid unnecessary losses, ride big trends with confidence. So summary is, so remember, market structure is like a road trip. It moves up, down or sideways. Identify trends before making a trade. Follow the structure. Don't fight it. Traders, welcome to this in-depth session on market structure. If you have ever struggled with identifying trends or spotting reversals or understanding how the market moves, so this video will change the way you trade forever. So now here is what I will cover in the next few minutes. uh, how to identify trends: bullish, bearish, sideways market, the secrets of trend reversals and structure breaks, how institutions manipulate price to trap retail traders. So then last is three powerful trading strategies using market structure. And if you stay till the end, I will reveal a professional, a pro trading trick that can give you an edge over 90% of traders. So let's dive in. What is market structure? So market structure is simply how price moves over time. If you look at price chart, you will notice that price doesn't move in a straight line. Instead, it moves like waves, creating highs and lows. Right? So, market structure helps us understand where price is headed, when to enter and exit trades when trends are changing. There are three main types of market structure. First one is uptrend, bullish market. Price makes a higher high, right, and higher low. So second one is downtrend, bearish market. Price makes a lower low, lower high. Range bound means sideways market. Price moves between support and resistance, right, without a clear trend. Example: if price making higher highs and higher lows, that means buyers are in control. We should only look for buy trades. If price is making lower highs and lower lows, sellers are in control and we should only look for sell trades. If price stuck between two key levels, it means the market is in a range and we should wait for a breakout. Okay, so now how to identify market structure. To read market structure, we focus on two key points: swing highs and swing lows, right? Swing high, swing low. So uh, these are the swing highs. The highest point before price moves down. Swing lows means the lowest point before price moves up. These are the swing lows. Here is how it works. If price breaks above the previous swing high, the market is bullish, right? If price breaks below a previous swing low, the market is bearish, right? Bearish. If price may fails to break previous highs or lows, if price fails to break previous highs or lows, it's a sideways market, right? So now the golden rule is already uh, the trend is your friend until it bends. So that's the foundation of market structure. Understanding highs, lows, and trends is the first step to mastering trading. But this is just the beginning. In the next part, we will go deeper into how market structure helps you spot trend reversals and trade with confidence. You don't want to miss it. So, if you found this video helpful, make sure to hit that like button. It really helps. And if you are serious about improving your trading, subscribe and turn on the bell icon so you don't miss the next part. And drop a comment below if you have any questions or if you are excited for part 2. See you in the next one. Happy trading. Thank you so much.